This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Let's take a look at the weekend's auction markets. And around the country, there'll be 2,100 auctions. Now, this is lower than last week and also around 15% fewer auctions than the same week last year. Sydney will have 612 auctions, another 146 around New South Wales. In Melbourne, 765 auctions, another 53 around the state. Brisbane will have 125 auctions with the same number around that state as well. In Adelaide, 139 auctions, plus another 10 around South Australia. And finally, in Canberra, there will be 98 auctions in total. The most viewed property on realestate.com.au's website heading into the weekend, 19 Hardwood Court, Buderim in Queensland. This is it. It's a tropically inspired 7-bedroom, 5-bathroom villa set in more than 6,000 square metres. Looks nice, right? The property has a long list of features, but the biggest draw card is the massive 300,000 litre pool with a slide and a stone cave. You've got to love a stone cave every time, right? There's also 72 Wattle Avenue in Royal Park in South Australia. It's a turnkey 3-bedroom, 1-bathroom home with a very attractive price guide of $385,000. There's also 25 Coltane Street in Vermont South in Victoria. That looks nice too. 4-bedroom, 2-bathroom home, perfect for bookworms. Features a fully fitted library, floor-to-ceiling bookcases, towering mezzanine level is accessed by a steep spiral staircase. Wow, you'd be a librarian. Price guide between $1.9 and $1.98 million. That's nice, right? There's 18 Mitchell Street in Northcote, a former 1880s Methodist church, being fully renovated. It features spacious bedrooms, vast open plan living and dining areas, modern features such as hydronic heating. Property also has a price guide between $2.8 and $3 million. Best news is you could probably put on your own wedding in there as well. But the week's top listing, 58 Frederick Street in Unley in South Australia. This is a blend of old sandstone charm and contemporary design that only South Australia knows how to do. The current owner is a builder who bought the property in 2017, spared no expense creating a perfect family home. He also won a Master Builders Award for this effort as well. The home has 4 bedrooms, 4 bathrooms, 2 double-car garages on just over 800 square metres. It's got a list of features: lush gardens, automatic irrigation, heated pool, spa and solar panels hooked up to a Tesla battery. There's also an underground theaterette, of course there is, with a window overlooking the pool. There are multiple entertaining spaces, an alfresco terrace, automated roof louver system, and a barbecue kitchen. There's no price guide. Seems like the sky's the limit there. Nice, hey? Very good. Until now, auction clearance rates have remained relatively high, defying the rising interest rates, and an increasing number of vendors now have an uncomfortable choice. Do they hang on to their current property, or do they cut their price to get a sale? Paul Ryan is Senior Economist with REA Group and joins me now. Paul, many thanks for your time. There's a dilemma, isn't it? Because, of course, you know, as I think even Adrian Orr, the Reserve Bank Governor in New Zealand said, well, if you don't sell, you haven't got a problem.
Yeah, that's exactly right. So, I mean, we know more than half of household wealth is locked up in housing, and the property market kind of, it affects people that are trading houses every year, which is a small proportion of those. But household wealth in general, and people in Australia in particular, know the value of their home, and that affects consumption. And that's one of the big considerations for the RBA and their interest rate decision, is how does that household wealth, and in particular housing wealth, feed through into inflation. And we saw today the RBA increased its inflation forecasts. So it'll be interesting how that all transpires going into next year.
That was, of course, in its statement of monetary policy out today. It increased that inflation guideline. One point, you make this very clear, and that is if your house price is going up, you're more likely to go and either do a renovation, stick in a new pool, or go and buy a whole bunch of new furniture, including a lounge suite, right? So it has the knock-on effect not only to employment, but also to retail sales.
Absolutely. That's a really clear effect. Household housing turnover has a big impact on consumption, and consumption's the biggest part of demand in the economy. So falling housing prices, the RBA expects to feed through into slower consumption and therefore slower inflation. That just takes time, though. So lower housing prices are kind of a necessary outcome of the higher interest rates we've seen. But we've seen the RBA's raised interest rates 2.75 percentage points since earlier this year. That's equal the highest increase in a phase of interest rate tightening that the RBA has ever done. So the last time that happened was in 1994. Obviously, household debt is much higher now than it was in 1994. So the RBA is in this kind of quandary here where they want to stop and assess how these really sharp interest rate increases are affecting the household sector. But they also are expecting inflation to remain very high over the next 2 years, above their target. So it will be interesting to see how much they view that interest rates need to go higher next year in order to tame that inflation beast.
There's one other aspect of this, and let's say, for example, if we see this weekend, as we saw previous weekends, the auction clearance rate comes in at 50, 60%, something of that nature. That means you've got between 40 and 50% of homes not sold still on the market. Have you done any work as to what happens to those homes? Do people cut their prices to try and move them, or do they simply take them off the market?
So it's always a little bit of both, but I think it's fair to say that sellers have gotten more realistic over past couple of months. We've seen that with auction clearance rates rising a little bit over the past 2 months or so. So I think what that means is a lot of sellers have been slow to adapt to the really fast increase in borrowing costs. So borrowers are coming to market now with about 25% less that they can borrow than at the start of the year. And it took a while for sellers to readjust their expectations from prices or neighbouring properties that may have sold earlier in the year to where borrowers are actually at in what they can afford. So I think now we're at a better position. The positives to the market are that borrowers now have a bit more certainty about interest rates after we've seen rates go up so quickly. The RBA stepped down to increasing rates in 25 basis point moves. And sellers are now recognising that actually prices that we saw late last year or early this year are no longer achievable. And that's why I think the clearance rate is holding up.
It's going to be interesting because the other space is going to be renovation and going to be people building new homes. That's going to be also key in this next little while.
Yeah, absolutely. It's a really it's a strange place for renovation and new construction activity. On one hand, you've got still these really sharp increases in construction costs, partly from materials and partly from labour. Now that's partly supply and partly demand induced. So you've got this situation where a buyer who would be potentially considering a renovation or a substantial rebuild of a property now being pushed to spending more on an existing property that already has those features. So in the market, it's kind of changed the relative prices of different properties.
Paul Ryan from REA Group, good to chat to you today. Many thanks. Have a great weekend.
Thank you very much.